Monthly inflation was less than last month, but a bit more than expected, which is why the Aussie dollar went for a trot above 68 US cents when the data hit traders' screens. But then it subsided back into the 67s, which is fair enough, because look at this. The ABS announces the annual inflation rate, which is the change in the monthly consumer price index since last July, 3.5% versus 3.8% in June and 3.4% forecast by the forecasters. But the change in the index from June to July was zero, and the change from May to July was 0.3%, which is an annual rate of 1.2%. So I'm saying the more current and relevant inflation rate could be 1.2%. Job done. Well, maybe. It's actually largely because of electricity rebates from the government. Now, the ABS also released quarterly construction work done data today, and private residential construction has been steady at roughly $20 billion per quarter for about 10 years. But that's dollars. It doesn't tell us how many houses are being built. And the cost per house went through the roof during COVID. It's come back down, but at 5%, housing cost inflation is still more than double what it used to be. Now, this graph shows government construction of infrastructure and housing. As you can see, governments don't build houses anymore, only tunnels and bridges to get to and from the houses that they don't build. Now, investors really liked the Woolworths result today, but the overall market fell 0.1%. The US market went up slightly and the oil price fell as traders concluded that the Libyan shutdown caused by the two governments there fighting over who runs the central bank is likely to be short-lived because they need the money to fight over. And that's finance.